Hello traders, welcome to the video. This strategy I'm about to show you works very perfect on the boom and crash market. All the boom and crash market, it works on the volatility index market. You can also backtest the forex market to see how it works over there. So if you look carefully on my chart, this is the 1 hour time frame and this is boom 500. I have just 4 indicators. I have the fractals, which are these arrows that you see on my chart. It helps me to mark out the swings low and the swing high. I have the moving average, which is a trend following indicator, and down here I have RSI, which has the 85 level, which is the overbought level, and the 15 level, which is the oversold level. And inside the RSI I have the Ishimoku, which is the main indicator used for this strategy. The 85 level, which is the overbought level, once we see market enters into that area, then we expect markets to sell to the downside. And the oversold level, which is the 15 area, once market enters into the oversold level, we expect to buy to the upside. So before I explain how this strategy works, let me quickly show you settings to the indicator. First thing you do is to click on this indicator icon. I said I have 4 indicators: moving average, fractals, relative strength index, and the Ishimoku. To select the moving average, click on the F icon on the main chart. Moving average, click on that. Make your period to be 35, shift to be 0, method to be exponential, apply to close. For the style, make it 3 pixel and select color of your choice. After that, click on save. For the second indicator, which is fractals, click on the F icon on the main chart. Scroll down, fractals, click on that. Make the style to be 2 pixel and select color of your choice. After that, click on save. For the relative strength index, click on the F icon on the main chart again. Scroll down a bit, relative strength index, click on that. Make your period to be 1, apply to close, style 1 pixel, select color of your background. If your background is black, you select black. If it is white like mine, you select white. The levels is what we need. Click on this pen icon over here, add, type 85 and 15. For the style, make it 2 pixel and select color of your choice. After that, click on save. And for the last indicator, which is Ishimoku, click on the F icon on indicators Windows 1. Ishimoku, click on that. Make this to be 1, this to be 2, this to be 52. Don't fill this. While for the styles, make this to be 2 pixel and select color of your choice. This, make it 1 pixel and select color of your background. The up kumu, make it 2 pixel and select color of your choice. The down kumu is the main thing that we need over here. Make it 4 pixel and select color of your choice. For this, make it 2 pixel and select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. For the zoom level, let's say this is the innermost zoom. So you zoom in 3 times. 1, 2, 3. So this is the best zoom level for this strategy. So when trading this strategy, what are we looking for? Pay attention to is this black line that you see inside the Ishimoku, which is the Dankomo. So if you want to sell, that means if market has been buying into a overbought level and you want to sell, you want to see this Dankomo crosses the other Ishimoku styles down here. If I zoom in, this black over here crosses it. Once it crosses it, then you know that market is likely to go in a downtrend. Then at the same time, you want to pay attention to this moving average, which will be confirming the turn. When the candles are below the moving average, is when the market have changed to downtrend, and whenever it is above the moving average, market is in an uptrend. At this point where you see the turn, the moving average is already above the candles, which is confirming downtrend. So once you have that, then you want to mark out the nearest swings. So you can see this is first swing, this is another swing. Okay, so that is swing points. So once you have that, then you want to see market breaks this swing point to the downside and comes to retest it. As it breaks here, you can have your entry immediately. Once this candle closes, sell here, then your stop loss will be above this swing or above this swing, which is the swing point to the upside. You can see those arrows, or you can wait for market to come and retest the point, and then you see a wick inside it. So you will enter your sell, then you will target swing points to the low side. So you see, test, then comes to take out this lows. Entry will be here, stop loss will be above here. So you see the market comes again to tap into that level. At the same time, it weakens it. Weakening it means that the wick of the candle is inside the swing point that we marked. So this strategy is like combining indicator to price action. So you can see these are indicator confirming where market is coming from, moving average confirming change in trend, and then price action, which is the good support level at this point, test, break it to become a resistance before it sell to the downside. So let me show you one buy condition so that you will understand better. So this is a buy condition. So what are we looking for? First thing we want to do is to pay attention to this black Ishimoku line, which is the Dankomo, to cross below the other Ishimoku styles. So if you see over here, these are the other styles, other lines. You see it crosses below it. You want to also see the moving average crosses below the candles. So once you have that, you want to mark out the recent swing to the left. So over here we have a swing, this is an arrow, then over here we have another swing. So we'll take our triangle and mark out that swing. So you want to see market breaks above, comes to retest it before buying to the upside. So you can see at this point comes to retest. Immediately this candle closes, you can enter your buy, or you can wait for when it tests the level and then it wicks it. You can see the wick of this candle outside. You can enter your buy here, and your stop loss will be below the swing low or this main low that's coming from the higher time frame. Market comes to retest, wick again. You can also have another entry, then come retest again. You can see that immediately it enters, it comes out again, buy, stop loss below this low, and targets the recent swing to the left. So you can see, you can target this point or this point. See that everything hits TP. You can see at this point. So let me show you one more example before I end this video. This is boom 1000. Like I said, this strategy works in all the boom and crash market along with volatility index. So what do we want to see? We want to see this black line, which is the down Kumo, goes above the other Ishimoku lines. You want to see at the same time that the moving average is also crossing the candles to the upper side. So you can have it at this point. So you will mark out your recent swing lows. These are swing lows to the left, and before we have the cross, this is another swing low to the left. So you're expecting market to break it, then come to retest this level. You can see it go and then wick it at this point. So once you have the wick closes, you can enter your sell. Stop loss will be above this swing or above this high. You see that market did not come to take out this level before market falls to the downside. You can see at this point comes again to retest a particular level here, and then target this level or this level to the downside. So that is all I want to show you for this video. After this, I want you to go back on your chart, backtest this strategy, trade it in your demo account, test it for at least 2 to 3 weeks, and compare your win rate to see how profitable you will be. So the only way you get better when trading a strategy is when you go back on your chart and you see for yourself, because you can see this, it may look nice to you, but if you don't go back on your chart to see them, you will not understand them better, or if you understand them, you will not be able to trade them in a live moving market. So if you combine this with your strategy for your entries, you will definitely see changes in your trading journey. And if you want to use this strategy alone, you can also use your higher time frame as a support doing analysis. You look for when market is about to change trend from the higher time frame, then you use this setup that I give in this video for your entry. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.